First, Chris, good morning. The $300 price target is upped, and the stock is going to reflect kind of that movement higher, but you're still neutral on the shares. Take us through the thesis. Why?
Sure, yeah. Clearly the bulls are winning this round. Obviously, you can see by the reaction in after hours. But it's going to remain a contentious stock, right? The back and forth will continue. There's three things that drive this stock. One, demand. Two, gross margins. Three, free cash flow. You can look at the demand numbers that we got 3 weeks ago and the preliminary results, deliveries, and production numbers, right? You could say the bears potentially won that round. As we moved on to the results last night, more operationally focused, you start to see, okay, let's focus on the operational efficiency of the company, mostly with the Model 3, and 2, free cash flow. So gross margins improved dramatically. Some of the bears that will pick on that will say, okay, what were some of the one-time items that were included in those gross margin benefits this quarter? And rightfully so, there were some of those things that were included in that, from lease payments to from full self-driving payments that came in. And on free cash flow, you had some days payables increases, you had some moving pieces in there as well. But at the end of the day, they are operationally getting better at building that Model 3. So that kind of takes us to the point of, okay, what happens next? Yes, Gigafactory in Shanghai is early, production's coming out, but what that means is that the cost structure, until that's up fully in 100% production, you need to absorb all of that cost. So your gross margins are going to come back down. So we've got to roll over to that now. All
right, so profitability and gross margins are things that investors in the past have given certain companies runway to kind of go through, Amazon in particular, I think of, right? The sales mix, how much of that is going to be part of that kind of investor thesis going forward? If everything is tilted more towards this mass market Model 3 with lower margins than, say, other vehicles, how much does that really resonate with investors with the stock right now? 254 closing yesterday, up 17% this morning.
Right, yeah. So I think where, what investors are going to look at or should look at is the Model 3 and the operational efficiency there and the margin expansion. We're going from the high teens to the low 20s. Now, when you get to the Model Y, about 80%, 75 to 80% of that same production of the Model 3 is similar in the Y. So you're going to get a lot more operational efficiency out of that as well. Also, from just a delivery perspective, recently we've been shipping cars, Model 3, from California to China. Takes up a lot of working capital. So that frees up a lot once you actually start to get demand fulfilled from China particularly.
What's the next thing as an analyst that you are going to be looking for in terms of an update from the company, whether it be from the next earnings report or kind of, some business updates? What exactly is the biggest thing that drives the next either leg higher or lower for Tesla shares?
Yeah, sure. So one is sustainability of margin expansion. And second, in the largest, I think, is demand. One of the things that keeps us on the sidelines is that a big part of future demand is coming from China. Obviously, there's a lot of reasons of why we should be cautious on that. I think that the visibility into the demand in China is something that we really kind of work on and really try to figure out what's real and what's not.
You're not the only one uncertain about China. Chris Eberle over at Nomura Instinet, the analyst who covers Tesla there. Thank you very much for those thoughts. We appreciate it.